Hi, Ben Kingsley here. In this Money Smarts tutorial, we're talking about step number 7, which is the rollover. So you know Money Smarts is an annualized system, and as an annual system, what we are doing here is we're rolling over and resetting for our next 12-month plan. So in this tutorial, we're going to take a deep dive into that rollover process. So here we are. We can see we're on our Money Smarts screen, and I've got Mr. and Mrs. Money and Smart. So it's a new couple here. We've got $28,000 of surplus that we wanted to trap for the year. We can then see that money in and money out over the course of the monthly periods. We've got all this information through here. So if you want to learn about monthly checkups and also how you set up the jars, they're in the previous tutorials. But let's go into this annual rollover. So some of the things I want us to look at. The first thing I want us to look at is the provisioning jar. So how did we travel with the provisioning jar? Looks like these guys did a great job in underspending what they'd planned to spend in regards to their different expense items here. So what's good about that is, guess what? That money goes into surplus and it's trapped for the next year. Now that might mean that next year they might spend a little bit more on clothing, footwear, dry cleaning and repairs, maybe, because they've saved or still have $320 left. But that's effectively what's going to be happening here. Now, how do we do this rollover? We can see here that we've now got the 12 months. Now, if I was to delete that, you can see that the rollover button doesn't actually live there. It only lives there when we add our final 12th month, and then we get to basically put the details in. So how do I do a checkup? Well, it's the same sort of principles from before, where we put in the balance. So the balance, the final balance of the last statement for April. So you can see there the balance was reading $51,406, and the credit card balance that I got from the credit card statement is $3,288. Now again, we know from the statements we need to review as part of the monthly checkups, if there's any provisional spending, we would add that provisional spending in here now. So of course this is a dummy couple, but if I did spend a little bit more of that remaining money that I had left over, then I would of course be adding that in before I rolled over for the end of the 12-month period. And also another tip for beginners is it doesn't have to be the first of the month. You can have any 12-month period. You don't have to wait until January to start your program. You can start at any time because it's just a 12-month block. It's not got anything to do with calendars, okay? So what I will say is a good tip is to contact your bank and try and line up when each statement is delivered to you. So when they do roll over. So if your bank statement is rolling out on the 14th of the month, but your credit card statement is rolling out on the 23rd of the month, try and align which one is easier for the bank to do so they both roll out at the same time. Just makes it a little bit easier for you in terms of how you do your monthly rollovers and then ultimately how you do your end of year rollover. So here we go. By putting that number in there, I can then have a quick look and have how see, so we've got a couple of months here where there's lots of spending that went on in April and also in November. We can see the provisioning jar that we set up in terms of pretty much exhausting the majority of that provisioning. We can see a beautiful line here, some months a little shorter than others, and you can see that in terms of the actual surplus that was trapped, and in other months with really large surpluses as well. Again, reminding you, that's why budgets don't work, but the Money Smart system does work, and that is because it can cater for those variations in terms of months where you have fixed costs that aren't necessarily regular, that are irregular, but it all balances out over that 12-month period. So we then have a look at, we've been traveling nicely through there, and there's this beautiful balance going up here, which is the overall balance in which the household has been able to create. So what do I do to roll over? First thing I do is just save the update, so that's now updated, and then I click on the rollover button. Now, it's an important point because we're rolling over and now we're going to archive that previous 12 months. So the great thing about this feature is that you're going to be able to go back and have a look at history, and we'll be able to keep those records for you, those 12-month periods for you as well. So it's just giving you a note here, by continuing the rollover, you'll be starting a new 12-month provisioning period. So all of the previous provisionings will also be reset as part of this rollover. And we're going to say, yes, commence rollover. Now, what we've built in here is this fantastic little feature where we're going to step you through the process as per the book. And if you haven't got a copy of the book, you can download it free. This is the instruction manual built for the platform and built for you to help organise and manage your money. So you can get that at makemoneysimpleagain.com.au. Download your free copy today if you haven't already got it. Little plug there. Now, what it then talks about is, okay, now's the time where we can look at the living and lifestyle jar and account and then see if there's any spending changes that we want to make. We can then start to look at making those changes. So how have you gone? What's going to be coming up in the next 12 months that you know, well, actually, I'm probably going to drive to work a couple of times a week. That means that there's going to be potentially parking that's going to be a regular cost for me, so I can put that into my living and lifestyle. Or if it's absolutely regular, then you can also put it in as a bill payment, depending on how you pay that bill. If you pay it to, say, Wilson Parking on a 3-month or 6-month basis, you can pay for that on a credit card or through the primary account. But if it's a regular thing and you want to have cash to pay that, then that will come out of the living and lifestyle account, which is our 7-day float. So in this particular case, there's nothing that I need to change. So I move to the next variable. Now, the next one here you can start to see is the credit card. So again, do I want to keep all of these cards or all of these expense items, I should say, in the same virtual jar in terms of organising and my money into the individual virtual jars? So in this particular case, I'm saying, yep, everything's looking good. I've got electricity. I want to change that over. I'm now going to pay the electricity bill. It's $240 for the quarter, but my electricity company is going to give me a discount if I pay for it bi-monthly. So I'm going to bring that down in terms of to maybe $165, which is going to be every 2 months. So I can click here and put it on every 2 months. And so I can see those changes being made. By clicking the next button, that's where that change will be made. If I want to again adjust that by putting it into any of the other jars, I can also do that. I can take that opportunity. Now, you do not need to wait until the end of the 12-month period to adjust your jars. Okay, but what we don't want to see you do is getting into a situation where you're constantly moving your jar money around, because that will, your reporting at the end of each month and then over the 12-month period will be skewed by those changes that you're actually making. So it is important to know, big changes, tweaks are okay, little tweaks are okay, but the big changes we want to try and leave for that 12-month program. And it could be another way in which it can incentivize you to trap a little bit more surplus and say, do I really need to do this now? Or can I save that little bit of money until I roll over to the next year, and then I can start that expenditure that I may be planning for today. So it's important to understand that. So I've made those changes. I click on the next button. Direct payments jar, that's really the primary account jar. And so these are my direct debits that are coming out from that primary account, whether it's high interest savings or offset account. So you can see there I've got look at income protections for the 2 couples. No, that's looking pretty good. It's not a discretionary. They see it as essential, and I agree. That is about defence and protecting themselves. So we move through into now the rollover provisions. Do I want to keep these same jars as rollover, or do I want to add new to that? So in this particular case, you're always looking for the add buttons and the additional buttons in terms of add an additional bill or add an expense, add an additional expense item that you want to potentially put in here as well. So when you're going through that process, look for those little add icons down the bottom, and you'll be able to add that in your live version of the upgrade that's occurring shortly. So that's important for you to get across. And then ultimately, any unallocated, I'll say that again, any unallocated expenses or payment items, that's also something that you can do as well in terms of, on the list we have, is there anything that you're going to start paying, such as fares? Yep. So I might be paying $15 a week to get tram in to work 1 day a week. So I'm going to put that down as weekly. I can then adjust for that. I'm going to now move that to my living and lifestyle. I've been able to do that, and that basically traps that information. And then ultimately it says, congratulations, you're done in terms of how you're going to review that. And magically, as we hit this complete button, everything's going to reset for you. So here we go. Here's our annual rollover, step 7 of our 7-step process, and we're done. Now, what's different? What we can see here is if we go to previous periods, we've got all of those records, but it's all been grayed out. So that basically means that that history has been saved for you. You can reference. You can also see your charts over that period of time, so you can refer back to that. And now we've got our brand new period. So we can also then see here's period number 2. The charts have all been reset. The tables have all been reset. Your provisioning amounts have all been reset as well. So you are ready to go into your new 12-month period. So that's how you do the rollover. It won't appear, remember, it won't appear until the full 12 months have been completed, and then you hit the rollover button and you're good to go for your next 12-month period. And that is step 7, rollover.